I would like to remind everybody that there's a lot happening in Hong Kong this week. This is also Hong Kong FinTech Week is happening right now, and there's a bevy of events happening in the lead up to the triumphant return of the Hong Kong Rugby Sevens. So I hope that you're going to be sticking around for the rest of the week and beyond to enjoy Hong Kong. Now, our next panel is going to be looking much farther than 1 week into the future. Whether it is artificial intelligence, crypto, DeFi, big data, my thing, central bank digital currencies, there are a host of new technologies on the horizon that are impacting now, and they are changing how we think about finance, how we think about banking, even how we think about the fundamental nature of money and society's relationship to money. Fortunately, we have a fantastic leader for this panel to look at technology, innovation, and the future of finance. He is Neil Shen, the founding and managing partner of Sequoia, China. He has topped Forbes' Midas list on multiple occasions and is now ready to lead our panel today. Neil Shen, please. Joining him on today's panel is Rob Kapito, the president of BlackRock. Also taking the stage is Daniel Pinto. Daniel Pinto is the president and chief operating officer of JPMorgan Chase. We welcome today Noel Quinn, the group chief executive for HSBC. And appropriate sitting next to him, as their buildings do in Hong Kong, the group chief executive for Standard Chartered is Bill Winters. And with that, Mr. Shen, take us to the future.
Thank you. Well, first of all, I'd like to thank Eddie and his team for hosting this wonderful event. And I'm so honored to be here and moderate this panel, which will talk about the technology, innovation, and the future of finance. So I think technology is really reshaping the future of finance, and probably no other innovation have come to epitomize the potential of the tech in finance as blockchain technology. While we have seen some interesting transactions, most of those are still very small, and DeFi uses are still not mainstream. The bright spot is that 2 days ago, the Financial Service and Treasury, the Treasury Bureau in Hong Kong has issued a policy statement on development of the virtual asset in Hong Kong. And thanks to Paul and his team, and I think this is clearly very, very enthusiastically accepted by the market. I think we have 3 pilot projects. One of them actually relate to us. There is an NFT issuance for FinTech Week. I don't know if any of you has download that and get that. I was told that you need to go to the physical counter to get that. But it's a very interesting trial, I think. And then we're talking about the tokenization of the green bond, and obviously, very importantly, the e-Hong Kong dollar. So the first topic I think we should ask in this panel is about blockchain. And the first question goes to Daniel. I mean, JPMorgan has been trying the blockchain application with payment. Can you share some thoughts on that, and what could be done, and what further could be done with that technology?
Thank you. Thank you, Eddie, for the invitation. It's great to be here after 3 years. So we started this journey a long, long time ago. So when Bitcoin and other cryptocurrencies started being a bit more popular, inside the company you have all kinds of views. People that were positive, people that were negative, but we were all fully aligned was about the power of the technology underneath. And also we realized that in the form that it was used, it wasn't exactly the type of technology that we need to be helpful for our clients and for us to process a lot of transactions per second and all that. So we developed first a platform called Quorum, which is our distributed ledger platform. We made it open to everyone, an open source. Every company could use it. And that was the base. And from there, we started thinking and developing products or services that would be run on that platform. The first one was Links, which is essentially a network of banks. So 400 of them, they are signed up. Close to 100, they're already operational there. And essentially, it's a way to exchange data for validation of payments. That is something that exists. In the US, still people write a lot of checks, and they go in boxes around the country. We have created a product to digitalize and stop that. And in the future, as more and more banks come into the platform, we will see services related to fraud, services related to foreign exchange services, so other things. It's an open platform. The banks that are in the network could, any of those, develop products and distribute them to that platform. And then from there, you start thinking about what else was possible to do. So we created JPMorgan Coin, which is essentially used for several companies around the world to optimize their flow of payments with their accounts around the world. So liquidity, and it is expensive, it's going to become even more expensive, so it makes a 24/7 platform to optimize that. We work with the Monetary Authority of Singapore, DBS, Standard Chartered, Temasek, to create a network of payments 24/7 to process payments in dollars and in Sing dollars that we're about to launch, and over time it will be more and more payments. And as time goes by, digitalization of securities, tokenization of deposits, that is coming. And as it comes in, you realize they're going to face the challenge of having to operate in a public blockchain instead of in a private one. So therefore, we are working on tokenizing identity to be able to be in that open environment in a secure way. So we are at the very, very beginning of the journey here, but what it feels to me, even though it's been very slow over a period of time, I think that this is the time where this type of technology, these type of use cases, they are going to really accelerate substantially.
Thank you. Now to Rob. So you have Aladdin, and Aladdin has worked with Coinbase, which is a very major crypto exchange for collaborations. And at the same time, you have invested in the stablecoin exchange called Circle. So share some thoughts behind those investments and those partnerships.
So let me pick up where Daniel left off. So I think in talking about this, we have to be very careful about the terms that we use. Blockchain, crypto, cryptocurrency, all of these things have very, very long stories and are very complicated, but it's all in the same thing to digitize the financials ecosystem. And so everybody in this room is going to be part of this in one way or another. And I think that my colleagues represented here are already pretty far down the path in something that's pretty new. We have a risk system, which I see some people in this room that actually participate in it, called Aladdin. And we have noticed over the past couple of years that the growth of digital assets and the blockchain, what we'll call ecosystem, is really starting to pick up pace. And what happens is I start to see an increase from our clients in wanting to invest, as well as internally from my technology department to want to understand the applications for our entire industry. So I do believe that digital assets and blockchain technologies are going to become very relevant for asset managers like BlackRock and our clients. It's going to involve how we choose to manage portfolios. More importantly, how we interact with my colleagues on the stage, and of course, how we operate in the new markets ecosystem. So what have we done? I look around here. I have spent a lot of time with everyone here trying to understand where they are and what their research is, from the exchanges to the banks to the other asset managers. The one thing I can tell you is everyone's spending a lot of money on trying to figure this out. So we have taken a series of steps. It's driven by client demand, the technology, as I mentioned, and I believe the maturation of the crypto asset ecosystem. There's a new word that we can use. So what did we do? We created a partnership with a company called Coinbase. You're probably an original investor in that, if I know you.
Unfortunately, I don't.
I'm sure. To provide common clients of Aladdin and Coinbase access to digital asset trading life cycles within the Aladdin workflows. So today, Aladdin clients who hold crypto exposures are only able to go through processes that take place outside of the integrated Aladdin platform. And so this integration that we're going to do supports Aladdin's core mission, which is to provide solutions that support a whole portfolio. So by connecting Coinbase's comprehensive trading, custody, prime brokerage, and reporting, we're going to take those capabilities and put them into Aladdin workflows so common clients can manage their crypto exposures alongside of what you mentioned, Daniel, the public and private investments, enabling what we will call an efficient operating model and risk controls. So this is looking at the technological part of what we call crypto through a company called Coinbase, which has really built some incredible rails that are different and more efficient than the current rails that we currently use. And then the second thing is I created a minority investment in a company called Circle, and they are the issuer of USDC. That is a dollar-based, fully reserved stablecoin. And with that investment, there's currently 45 billion of USDC in circulation already, of which, through my partnership, we're the primary manager of the assets backing USDC. So I think that stablecoins have a real potential to drive efficiencies and disruption across payments and capital markets activities. So we're working with Circle now to explore those opportunities where we may be able to enhance financial inclusion in the payments domain, enable frictionless real-time settlement with the capital markets, which is really quite astonishing that we can move money in a second without posting collateral, which will change, again, the ecosystem and the efficiency and the cost to our clients, and also increase the efficiency with my colleagues here of how we interact going forward. So there'll be more to come on this.
Thank you, Rob. So you talk about Coinbase. Indeed, this is one of very, very few crypto exchanges which has largely complied with regulators globally. Now, regulators has looking at this technology and asset very closely. And one thing, other than stablecoin, they have been developing is obviously CBDC. This is obviously creating a lot of impact to the banking industry. So my question is to Noel and to Bill, so what does CBDC mean for you? Is this good or bad? I mean, I think the Hong Kong dollar is very much a CBDC. So we'd love to hear your comments.
It's good. And let me give you a bit of context. Last year, HSBC moved around $660 trillion of money around the world. 98% of that was straight-through process, digital execution. Now, so digitization of banking is happening and has been happening for many years. In fact, if I go back through the archives of HSBC, the first digital banking platform for treasurers was probably launched about 30 years ago, called Hexagon. It then morphed into version 2 called HSBC Net, and it's now on version 3 on our technology base. So digitization has been happening for a long time. If I look at CBDC, digitization of real-time payments in domestic sort of retail banking has happened around the world over the past 5 years. And therefore, there's a questionable case for CBDC because real-time execution and transfer of liquidity from one customer to another in a domestic market's good. It's happening. However, real-time payments for consumers and businesses cross-border is not yet happening. It can happen within a banking network. So each of us here can move money to our clients real-time overseas if they're in the network of the bank. But going outside of that network, I think there's a big role for CBDC and blockchain to actually effect real-time movements of money cross-border, low cost, immediate transfer of funds. And I see blockchain as a great piece of technology to satisfy that requirement, and that's why I know Bill and ourselves are working with Eddie here to bring CBDC out of the concept into the reality. Pilots already run, and I think that can be a big impact for small and medium-sized businesses to get the benefits of real-time movement of money cross-border that the large corporates get today. And I think that can unlock and facilitate international trade. And credit to the HKMA for putting that collection of countries together to bring this to market as a real solution rather than just a concept. Now, blockchain more generally, you know, we did our first trade execution on blockchain probably about 4 years ago. Blockchain as a technology base.
Which sector? Can you share some a little bit detail?
We did the first trade here. I think it was a trade between Asia and the Middle East, a real-time trade, not a pilot trade, executed on blockchain. So blockchain as a technology has a place, but it's not the only technology to solve some of our digitization solutions or problems.
Thank you. Bill?
I think each of Noel, Daniel, Rob covered a lot of ground. I think one of the interesting questions is why the world needs CBDCs as well as the stablecoins that Rob was talking about. Circle was the example, of course. There are others, and they're gaining tremendous traction. The CBDCs, some would argue, are a response to private sector stablecoins. The fear that monetary policy was going to be wrenched away from central banks. And that the money flows would be less visible to central banks than would otherwise be the case. And that in and of itself is a motivation for CBDCs to exist. But it's probably not a good motivation for a CBDC to thrive, because at the end of the day, if you talk to Rob's colleagues at Circle, they spend their days and nights thinking about how to embed themselves in the digital economy and how to make the customer experience a better customer experience. And as much as I love central bankers, they don't wake up and go to bed at night thinking about the customer experience. They wake up and go to bed at night thinking about financial stability and monetary policy and economic growth, things that are critically important. So the key for me is I think these things can coexist. We know that through regulation, CBDCs can not just displace stablecoins, they can displace banks. I don't think Eddie wants to be in the credit intermediation business in a major way, and I haven't heard that from any other central bank either. So there's always going to be some, well, I hope there will be some guardrails on the amount of CBDC that is in issuance, because those are deposits that will not be in banks. Right? That's the nature of a CBDC. So I think that there's some really fascinating and thorny questions. How do you get to the customer use case most effectively? What's the role that a central bank should play in that? And how does that interact with the primary functions of a central bank around financial and monetary stability? There's a solution to, there's a nexus around those various questions. And I think central bankers are approaching it very, very, very thoughtfully. I think there are other use cases. There are surveillance use cases. There are financial crime use cases or fighting financial crime use cases, which run counter to some other objectives that we've got around free flow of information and markets and transparency. I think these are extremely vexing questions that will be tackled by some central banks, not all. And we're at a super early stage in this process. But I think at the end of the day, if we get a better customer experience and less friction costs, very much to Noel's point, this can be a successful venture and can coexist private and public sector.
Thank you, Bill. And then we're going to turn to the role of digital technology in banking. So back 3 years ago, the Hong Kong Monetary Authority gave out 8 virtual banking licenses. One of them is Mox, which is a subsidiary of Standard Chartered. So I'm gonna lead the question with you again, Bill, that how this experience so far, how is Mox doing? And you also have your own online banking. So are you worried about cannibalizations between your subsidiary like this versus your own operations?
So first of all, I'll say we are extremely grateful to the HKMA for having given us a digital banking license. That was a big experiment in the beginning. I think it's an experiment that's worked well for the population in Hong Kong. Mox, and we built our first de novo digital bank called Mox in Hong Kong. We've now replicated that in Singapore with a bank called Trust. You're correct that we control Mox in that we own 65% of it, but we have Mox is a partnership between Standard Chartered, Hong Kong Telecom, and Trip.com, the Hong Kong Telecom group, which includes FWD and others. So it's been extremely successful so far. This is certainly relative to our expectations. 400,000 customers. We've got a full range of deposit, savings, credit card, soon to be credit, and wealth products. It's got the top app store ratings of a financial services app in the world, and has maintained that position for 2 years, and it's gaining tremendous momentum. We expect that it will break even sometime towards the end of next year or early 2024, which for a digital bank, standalone, is pretty good. Why is that possible? Well, it's not because our deposits are different than Noel's deposits, or for that matter, the deposits sitting in Standard Chartered Bank. A deposit's a deposit, a loan's a loan, a credit card's a credit card. Yeah, we can play around with reward points and all that, and we do. The difference has to be the customer experience, again, but two, the nature of the partnership. So in Hong Kong, the partnership with Hong Kong Tel and Trip, largest online travel agent in the world, obviously not the best time to partner with an online travel agent, but it will be, right? And we're all evidence of that.
Thank you for that comment. Actually, I'm a co-founder of C-Trip.
I know that.
I think I'm very glad that I'm oftentimes when I opened the Trip.com Hong Kong, I saw the Mox popping up. So.
And you have a Mox account, Neil?
Have not.
I'll
you need to convert me into.
I'll see you afterwards.
Okay.
But no, in Trust Bank in Singapore, which has also added 400,000 customers, but in that case, in just a couple of months, far exceeding our expectations, with an equal balance of credit and current account subscriptions. Our partner is the FairPrice Group, which is the ubiquitous grocery store chain in Singapore. Every Singaporean touches the FairPrice Group every day, once or twice. Right? And so what's different about the virtual banks is the nature of the coalitions and partnerships that you can create, rather than the nature of the banking product itself. Although, of course, if the banking product is no good, nobody's going to use it. So yeah, it's been a huge success for us. We'll continue. We've got 9 digital banks in Africa. We've taken a different route in markets like Korea, where we helped build Toss Bank, and in Taiwan, where we helped build Line Bank. We're a minority shareholder there, not controlling. But very, very successful banks with a couple of million customers apiece, et cetera, et cetera. So I do think that it's an alternative to conventional banking. You asked, is it a problem that we're cannibalizing our own business?
Yeah. Are the two products really the same, or there are very different customer base, or
We've targeted the Mox product at younger customers, although interestingly, it's been taken up as much by people my age as it has been by people in their 30s. It's a little bit more mass market product, and Standard Chartered is a bit more of an affluent-oriented bank. But yeah, of course, we're cannibalizing ourselves, and I can tell you it's made Standard Chartered Bank better by virtue of that.
Thank you. So you are very happy with the partnerships, and you are replicate that to other, Great. So the next question will be, given to both Noel and to Daniel. So when you look at the whole digital banking, there are some new entrants. And one of those are the so-called big tech companies, whether it's, the Alibaba or the Google of the world, or whether, some, startup companies, for example, New Bank from, Latin America. So those are called, the challenge banks. Are you worried about those competitors, which has really so-called mobile-centric and mobile-native startups, and they have some wonderful technology and claim that they can change the whole banking industry. So what's your take on these competitors?
So when I look at the retail business, so the model that really has worked the best so far is the hybrid model, where you have optimized branch network and provide amazing digital services to your customers, and you use both. And that is a model that we follow in the United States, extremely successful. 65 million customers, 18% market share in credit cards, 11% of the national deposits, million small business that we cover. There is no doubt that the big platforms will go into that space and compete. Also no doubt that to replicate that model somewhere else is impossible, because it will take billions and billions of dollars over such a long period of time that it will really make the journey almost impossible for any bank, regardless of the size. So then we thought, so how we are going to diversify our business by growing outside the United States? And the answer was digital. And we chosen the United Kingdom, a market that we know, and we launched Chase in the UK, a pure digital bank. We were expecting to find 500 customers in the first year. We have over 1 million, 12 billion pounds of deposits, and it's growing very, very well. We are completing the services there. There is a very, very good take. And the reason why I feel that we can compete in that space with the digital banks is the recognition of the brand, number one, the strength of the balance sheet of JPMorgan Chase that give the confidence to customers to leave more money with us than they will do probably with a digital banks. And since we are starting from zero, we have created a brand new modern platform that gives us the ability to develop an amazing customer experience. So on top of that, we bought Nutmeg, which is a digital wealth management that we are going to incorporate in our platform. And also the third biggest retail banker in the world is Brazil. So we bought 40% of a digital bank called C6. We have a path to buy more if we decide to do so. When we started talking to them, they have 5 million customers. A year or year and a half after, they got to 17 million customers. And a full platform, all the services, wealth management, small business, lending, and savings. So I think that we will see how the journey goes. So far, we think that is doing better than we were expecting. There is a role for other types of digital banks. We are challenged for them and for us as a pure digital bank is to get to the point of profitability. We are very new, we haven't got it, and many of those haven't got it to that point either. But so far, I think that the ability to, a company like JPMorgan Chase, to really be committed to it and continuously invest in the long term is very, very important and give us a competitive advantage.
Thank you. Noel?
Well, I think it's, as an established institution, you have to embrace the fintech sector. Competition's healthy in all markets. Every institution will take a different view on where to compete and who to compete with. But you've got to embrace fintech. So in that regard, we've invested about $700 million of our own money into a range of fintech-related businesses. And we're doing it primarily to actually learn and collaborate with them rather than just see it as a financial investment.
Sort of helping you to enable,
and bring that technology into the bank,
right.
So to continue that digitization journey of HSBC and to learn and collaborate with them, make their business stronger, but bring capability into the bank as well. In terms of one particular journey we're on here in Hong Kong, we set up, one could argue, a cannibalization of some of our payments architecture here in Hong Kong with the PayMe infrastructure we built, which is providing a digital wallet solution between consumers and businesses. And we've now got 2.9 million people on that network, and we're growing the merchant base rapidly. And that, for us, was an important milestone for us to actually go in on a very different sort of banking solution. Clearly, we're a relationship bank at the heart. We provide services to both consumers, SMEs, and large, to corporates as well. But we embrace innovation and technology, and we thought it was important to build a digital wallet here in Hong Kong. And we're getting close to 50% market share of the consumer base here in Hong Kong after about 3 years of building that. So that's good. The next stage for us then is, how do you innovate that model elsewhere? How do you take that model to other places? So my message on fintech is competition's healthy. It's everywhere, every market you operate in, and embrace it.
Thank you. So back to Rob. So, you mentioned actually just now about Aladdin, which is a wonderful analytical tools. And this is pretty amazing because, you are one of the largest asset managers in the world, but you incubate this internally and develop as a great, new business line. And it's actually offered to your customers, yourself, as well as to your competitors. So tell me a little bit of how this gets, developed internally as an important technology tools.
Well, I think these days everybody wants to be a technology company. So if you read any bank's or asset manager's earnings report, it's going to say that they're investing in technology. We're reinventing ourselves through digital capabilities. So we're very supportive of that mindset. We've been doing this for the last 30 years. Believe it or not, when we started the firm, I would never think I would have an artificial intelligence lab. We have citizen developers on investment teams using APIs and advanced data science capabilities to build a portfolio. And we also have $1.3 billion a year coming in through our fintech business, which grew north of 10% again last year. So the one thing I know about technology in every asset manager or financial services firm, there's one thing in common. They have an endless list of things to do. So increasingly, what is happening is the world's largest investors really want to focus their time, energy, and resources on true points of differentiation, which is what my colleagues here talked about, how they're going to navigate the markets, how they're going to generate performance, and how they're going to manage client relationships. But for everything in between, especially having a scaled investment technology, they really just want access to the best. And they don't want to recreate the wheel. And that's where Aladdin has come in. So since the very beginning, Aladdin is our proprietary risk management platform. It's been one of our foundations that separates us. And the portfolio managers of BlackRock are Aladdin's biggest users. So we view this user-provider model as one of the principles of Aladdin and something that does differentiate us from others, as you mentioned. But at the end of the day, both asset management and technology solutions are businesses that are based in trust, as was said in the previous panel. And our clients have put their trust in us to put their best interests first, and what we are applying is the fiduciary mindset of which side of the business they're on. So the way I would describe it to you is Aladdin is a tech platform that unifies the investment management process. So beyond enabling better risk analytics, it's created a highly efficient and integrated model and an integrated solution that allowed us to scale and grow, and unified employees because we work from one database. There's only one number that they can use across the firm. There's only one language that they could use across the firm. And we have a shared process and a common system. So we took this decision many years ago. It was a big argument of what we should do. And we took this decision to make it available to clients as a service provider. And it's continued to develop over time in response to their needs. Now, I have to say, and I always write it down, to be clear, Aladdin does not make investment decisions. It does not perform roles of an investment professional, nor does it make decisions for any professional in the process. It just enables investment professionals to conduct their work more easily by enabling quick access to the information that they need to make and execute on their own decisions based on their firm's objectives and decision-making frameworks. So lastly, and to be very direct, each Aladdin client has their own customized version of Aladdin. That's how we do it. So their version of Aladdin is hosted in a dedicated environment, segregated and protected from other Aladdin clients, including BlackRock. So technology now has enabled us to provide more choice to our clients. We're able to provide clients with differentiated analytics on their whole portfolio. So as we grow, the clients' demands are changing. They're looking for new products, strategies, solutions. Aladdin is going to continue to grow and provide more value because the markets are growing, the products are growing, the ecosystem is behind, and we have to catch up. And Aladdin is enabling many people in this room, and certainly BlackRock, to help keep track of that.
Thanks, Rob. Crystal clear on neutrality of the Aladdins. So. You did touch upon this point of AI and big data. So I'm going to go to Noel because you have a lot of data. We know in the technology world, having data is great, but also having data can creating a lot of inherent tensions. You know, the startup versus the traditional financial service company look at data very differently. I think, you know, the client privacy oftentimes conflict with their demand for tailored product. And then also there's a compliance issue, which also could conflict with the demand for pulling data from multiple channels and resources. I know you have been collaborating with Google, the very leading big data company, the AI company, you know, in the digital space. And how is that partnership come along? And what is HSBC try to get from this partnership?
Yeah, thanks, Neil. And let me just clarify. I mean, if you look at payment state, if you look at a bank like ourselves or JPMorgan or Standard Chartered, we have a huge amount of payments data, huge amount of trade data, huge amount of foreign exchange data, and client data. Now, one of the biggest challenges for an international company is when you move in significant amounts of money and goods around the world is making sure you're detecting fraud and inappropriate financial crime. And that's where the power of AI comes into play, because what you're trying to do is to take that fraud detection, financial crime detection methodology onto the next level. Instead of using simple algorithms or even complex algorithms, you're trying to take it to the next level. And what we're doing is partnering with Google to try and build the next generation of essentially sophisticated analytics using AI techniques to detect patterns of behavior that could could suggest there is fraudulent or financial crime activity taking place. And that's particularly important because the level of sophistication of determined actors in that space is increasing by the week and by the month because they're using the same techniques, they're using the same capabilities. Now, in building those models, in building that AI, you're not contravening any data privacy issues because you retain the encryption key, you retain the capability, you're using the tools, but it's not being used in letting customer data go outside of a data privacy wall. But you're using the analytics capability to try and really get sophisticated modeling and detection capabilities for fraud and for financial crime. And that's what we're doing. And I'll be surprised if our competitors in the room today aren't doing a similar thing. And I know from a regulatory point of view, all regulators around the world are keen for the financial system to keep upgrading its capability to make sure it has the ability to detect inappropriate behavior. So that's the primary use. Using AI for other reasons, you may have different considerations on privacy and use of data, but when you're fighting financial crime and fraud, I think you've got to keep going to the next level of sophistication.
Thank you. So same question to Daniel and to Bill. So how is AI and big data being used in your customer services and offerings?
So it's been a long journey too. So one of the, obviously like everyone else, we set up our research labs of artificial intelligence, and we have a center of excellence and all that. But for this technology really to be powerful, like anything else, you need people to use it. And then you need to really teach the organization the power of this technology to have more and more and more use cases. And as time goes by, there are more and more use cases coming along. I will mention a few. Markets, the fixed income trading and equities trading. More and more, we are moving from rule-based algorithms that are very simple and execute whatever you give the constraints to smart algorithms that they are quoting transactions to clients and doing the risk management and executing in the market. So we do it for several asset classes at the moment. So fraud, Noel mentioned about fraud. When you have, no matter how sophisticated a normal algorithm is, you're going to have a huge amount of false positives. What AI comes into is to really reduce those number of false positives and create the number of cases that people have to investigate to be a lot smaller than it would have been otherwise. And in the retail business, is really fascinating, all the things that we are doing. I'll give you an example. So call centers, we have call centers around the world. Today, when a customer calls, so he talks, that person talks to one of the people in the call center. As the conversation goes, the machine is listening to that conversation and providing feedback to our employee of what would be the possible solutions to the problem that customer is calling for, reducing the amount of time to solve that problem substantially. And we are using it in many other cases, offers. So in the retail business, instead of being bombarded with things that you will never do or will never consume, is more help us to target it. So there are many, many applications that is evolving every day. But the good thing that I feel, at least in our company, is now just become more mainstream. So everyone in the company knows the power of this technology, and when they think about customer solutions, the AI machine learning component of it comes quite natural, and it wasn't the case a few years ago.
Okay, Bill?
If I could just try to build on the excellent comments from Noel and Daniel. Each of them talked about the way that we're getting more sophisticated using data that's in-house. To me, one of the really interesting frontiers is how we incorporate data that's coming from the network, from outside. And maybe to pick on one of Noel's examples around financial crime. In fact, the three of our firms have worked together in various efforts to use the data that we have across our 3+++ firms to identify patterns of cross-bank behavior that indicate financial crime. We brought down some really serious human trafficking rings, for example, through the use of a coordinated attempt at taking all these tools that Noel and Daniel have talked about and applying them not just to our own data sets, but to the data sets that exist in terms of payment flows between banks, or eventually between banks and our customers. Second network effect that's critical for us is maybe getting back to, Neil, some of the questions you asked about the way partnerships work. There's always an exchange of data in a partnership, and the data is orthogonal. I mean, the data that we get from Hong Kong Tel or from Bukalapak in Indonesia, our partner there, largest e-commerce platform, it's very different data than the data that we get ourselves. The data that we have is very different data than they have. And the combination of that data, of course, respecting all the inherent privacy requirements and restrictions, is exponentially more valuable than the data that one side or the other has. So I think that the next frontier is how we create, in an appropriately guardrailed and ring-fenced sort of way, how we create these data networks that are fundamentally more valuable than the data that we ourselves have. Added benefit of that is that a bank that isn't as big as HSBC or JPMorgan can actually compete directly, because we have natural data partners that will want to deal with a bank that's a little bit smaller rather than a bank that's a little bit bigger. And I'm not saying, like, my objective isn't to compete with Noel and Daniel sometimes. But obviously, we do much more together, frankly, than we do competing with each other. But the use of data, the use of data networks, is a fundamental leveler of the playing field, which I think is good for competition and therefore good for consumers, good for societies.
I think Bill's trying to get me to open a Mux account.
You're most welcome.
Okay. Well, thank you. One last question before I open the floor. I just think we have 4 or 5 minutes to go. This is a quick one. So globally, the regulators are all looking at crypto and blockchain. And clearly, the regulators are stepping up their efforts to put this into their regulatory scope, right? So as leading financial service company, what the advice you give to the regulators, or what do you expect that they could do to, one, make sure this market continue to grow healthily? Second, there will be great protection for customers. Anyone?
Yeah, my only advice to regulators is to the cryptocurrencies, and you're talking about non-fiat currencies here as opposed to the digital, the stablecoins and things like that. Bring it into the system. Don't leave it out. Bring it into the system. You can watch it, observe it, understand where it's getting, where speculative bubbles are building. Leaving it outside, it's going to be very hard to control. It's not going to go away because regulators wish it away. So I think the proactive approach that the HKMA is taking is exactly the right one. I know you're going to be cautious about how you do that, and you should be. But the opportunity to bring this into the system, I think, is correct.
I think if you look at the technology that crypto is based on, the technology is not the thing to regulate. Technology should be free to innovate. When that technology produces a product that becomes an asset class, which pure crypto has become an asset class, there's a strong argument to say, and particularly when that asset class is being bought by the mass market, then there's an argument it should come into the regulatory environment. If it's a technology facilitating payments, that's different. If it's a technology that becomes an asset class, and that one asset class is unregulated, but all other asset classes are regulated, it feels strange to me.
Okay.
So clearly, it's a very highly speculated small asset class as it stands at the moment. And I agree with Bill and Noel. So if you look at how regulation is trending today, is towards particularly the crypto assets, the non-fiat crypto assets, they are going to be left outside the banking sector because the capital rules that they're putting in place are quite punitive for any regulated entity like a bank to participate. So probably regulators should reconsider that and say that it's safer for the consumers to operate with regulated entities as they do all the other financial services need. But at the moment, the trend is not coming this way.
So instead of investing in it directly, you should have it professionally managed. Is that what you want me to say? I think it has to mature more, and we're not there yet.
Okay.
Yes.
Good. So I think we're running out of time. Just one question for the floor, if any. All right. Looks like we're all set here. So let's give round of applause to this wonderful panelists for sharing the insights on tech. Thank you. Thank you.
And thank you, of course, Neil Shen. Great job on moderation today. Gentlemen, if you could move to the center of the stage for a photo. We're not going to let you get away that easily. There we go. Don't want to miss out on a gathering of those handsome mugs. All right, thank you very much.